I am your host, Steve, and today going to be talking about the trade of the week, which was Priceline. Could talk about Google or Netflix and how they took off crazily after their earnings report, but I'm not going to talk about those simply because honestly, I feel that was a luck of a draw. You wouldn't have traded that way. Earnings are always a gamble. I mean, just on that Google play alone, before earnings, you were looking at an option at the money of close to like $4,000 for one option. And that really isn't that isn't what you would normally go for. I mean, yeah, it paid off an insane amount of money, but my whole goal is to show you risk management, and that would be like being trigger happy and just going off the gun and hoping that it went your way, which if it didn't, you would have lost, well, close to $4,000. So, now we will be going over Priceline on Friday. If I pull up the chart here, let's see, I have it already set on the 17th, which was Friday, at 9:30. And now you see through the week, it was taking off. It just kept going, and going. Now, 1194. Why this is important is because it's getting near 1200 price. And that is a huge mental, psychological level of resistance. So, when I saw this, I knew one of two things was going to happen. I knew it was going to get up to 1200. But what I didn't know is if it hit or reached 1200, was it going to, break down and have a terrible day, or was it just going to continue and skyrocket? I don't really know how much the whole Iran deal and the energy sector may have had to do with this, or if it had anything to do with it, but I pretty much at the open was watching this stock and it went in my favor. And this was a like 4.5 minute trade. So I am going to start the day, and while we're waiting for that time, I will go over things that I looked out for. Okay, so I'm on a 5-minute chart, and as you can see, the MACD had a massive buy signal to get on the call side pre-market. Well, pre-market, those that have followed the past videos know that this is kind of hit or miss. I mean, if you want, you could have gotten in on the trade, but more than likely, I mean, especially from 1182 to 1194, this was gonna go one of two ways. It was either gonna gap back down to 1184 and possibly continue down, or it's going to continue its run. So, see here, it hit 1197. So what I'm going to do is I'm going to get in the call that I had bought on Friday, which was the 1,200 calls. I'm actually going to go ahead and set the order. I'm going to set it as a limit because it filled at 4. So, and it ended up putting me in the position anyway. Okay, so since I'm in the position, we might as well just let it go. I said this was a 4 to a 4.5 minute trade. Once it hit 12,000 or 1,200, it took off within minutes. So I will fast forward this a little bit. Have it fast forwarded like that, and I will be just like that. That way, you can get out of the trade. This kind of a trade, you would literally, this fast, you would be looking at a 1 minute chart. At the time, I was at work and I couldn't exactly watch this like I typically would. So I had set a trail stop, 50 points, or $50 back. So the trail stop would be T-stop 0.50. Can't do that with the on-demand. So we just gotta wait. Alright, it's nearing the time that I would have exited this trade. And this would have been it right here, according to my trailing stop. So that little move, I mean, my trail stop was pretty tight. So that's why I ended up getting out of the trade so quick. Like I said, I couldn't watch the market. So, I was cautious. I was careful on my position. Which would much rather be cautious than risk this tanking within 2-3 minutes and losing, as you can see, $1,000. I mean, I believe I ended up walking away at this trade with almost $800. But if we were going based off of the 11-day moving average rule, see what this would have put us at. Alright, first minute. And second minute. Alright. Okay, so with this, would have gotten out at 672. So actually the method that I did, which it wasn't with TD Ameritrade, it was with my E-Trade, how I had set it up with a $50 trail stop. It actually got me more money. And like I said, it ended up getting me out at this little candle right here, which is absolutely fine. Some gain is better than trying to ride the whole entire move and then getting hit with a loss. Alright, so now that we got that done and out of the way, next is the stocks to watch for the week. And those stocks are, first, we have Google. Either ticker GOOG or GOOGL. Either one will do just fine. Reason being, this is a huge, huge gap. It's gonna come down at some point this week. It might not be Monday, may not be Tuesday. It's going to happen though. There's no way that this stock is going to continue to ride and take off and just. It's not going to ignore this gap. So that is definitely something to watch. Also note that the RSI is well above 70, which means it is overbought, which it is. That was due to earnings, and it blew everyone away, and those that made money on it, awesome. Personally, as I said before, I think that was way too risky to go for something like that. All the indicators state very bullish. That could be because of this earnings move, and maybe tomorrow, or Monday after hours into Tuesday, depending on when this move starts to fill the gap, these could change to bearish or very bearish. Next is Netflix. Netflix was the same way. Had a little bit of a pullback on Friday of $1.04, but again, it has a gap to fill. Might see some resistance at 107.88. It fails, break that, it will be back down to 100, and if it breaks that, it will be at 95.98. So those are the prices to look for. Next, we have Facebook. Facebook also managed to take off. So again, another one looking for a gap fill. First level support, 92.54. Next one, 91.50. And then we are back into normal territory around 89.14. I think Facebook might have a little more upside compared to Google or Netflix. But again, I'd be looking for a move on all these stocks mentioned so far. Look for a move on the way down, not on the way up. And finally, we have Apple. Apple's earnings are Tuesday, which is the 21st, and it will be after hours. Usually, Apple likes to run before earnings. Again, I don't trade on earnings. So depending on how the earnings play out, either if it goes down, then you're going to have the bargain buyers that are going to push it back up, or if it takes off like all the other stocks so far, it will then have a gap fill too, so we'll be looking to get on the put side as well. Personally, I'm not certain that Apple will beat this quarter. Simply because last quarter was all their, the iPhone 6 and everything like that. I think the Apple Watch was a complete disappointment, and I think that is going to affect them. Also, the drop in iPad sales. The only thing they really have going for them this earnings would be iPhone. So personally, I'm looking for a move down and then bargain hunters to buy this one back up. But never know. Could be wrong. Like I said, earnings are a gamble. So we'll have to wait until after hours on Tuesday to find out. Well, that is it for this episode of Dissect the Trade. Episode 10, which will be next Sunday. It won't have a special guest. That is going to be possibly an episode or two, maybe 3 episodes from now. Stuff to take care of and things like that first. Want to make sure that it is a very, very informational and educational video for you guys. To really dive into the way he trades, and so look forward to that. Well, until next time, thank you for watching, and if you have any suggestions, anything you would like to see added, or any stocks in particular that you would like to see for the following episode, please feel free to comment, whether it be on the YouTube channel, the Facebook group channel. Criticism, constructive criticism, I strongly recommend and will accept that. If you haven't subscribed to the YouTube channel, please do so as well. Just hit this little subscribe link right here. And also, too, in the description, there will be a link to the Facebook group, Options Traders United, where you can join us and be a part of our money-making process. It's a very, very tight-knit group. Everyone helps one another, whether it be learning how to do options, advanced option strategies such as spreads, which I will start getting into over the next month or two. First, I'm going to trade a few of those myself, and I'll do a video on them once I feel comfortable that I have a good enough knowledge of how they work. So that's what's expected over the next few episodes. So until next time, happy trading.